Hey, good evening. I'm Dan Fitzpatrick here at stockmarketmentor.com, and it is Thursday, January 29th. Let's look at Google. Okay, they announced earnings after the bell. Their revenue grew 15% in the fourth quarter, which sounds pretty smoking hot, but Wall Street was looking for more, right? So it didn't beat estimates, but 15% is pretty good. So let's look at the after-hours trading, and I will explain to you why trading in the after-hours market is generally not a wise thing to do. Okay, initially, the stock traded which way? Okay, here's 4 o'clock. Okay, 27,000 shares traded. It's a $500 stock. 27,000 shares after the market closes is kind of a big amount of money. Next one, 58,000 shares traded. So this is a lot of shares being traded. Sell it, sell it, sell it. They missed their earnings. So you got to sell it. Well, somebody comes in and says, well, let's see about that. And now the buying starts. So you're shorting the stock after hours. And you could say, oh, well, yeah, I shorted here and cover here or even down there. That's great. If you're that guy, God bless you. But for a lot of people, most, you're going to go trade after hours thinking you're going to get a jump on the next day. So, and by the way, if you're long Google going into earnings, what are you doing? You're trading after hours. You're going like, oh my gosh, I got to liquidate my position. I got to get out of here. So you're the guy that sells at 490, right? Let's look here. Okay, so stock trades where is literally, I forget, I can't believe it, but I think it did. Yeah, traded all the way down to 490. So you were holding the stock, okay, looking for the big move. This is how the stock had traded during the day. This is a nice bullish hammer pattern after a nasty decline. I'm going to buy this stock and get some money here. They announce earnings. They're disappointing. They missed revenues, and you wind up being the guy that sells right down here at the lower Bollinger Band, right at 490. Then what happens? Stock moves up. Now you're not knowing what to do. The point is this: decide why you're owning a stock, and then only make your decisions as far as what to do with it during non-market hours, and then actually do what you've decided to do during market hours. If you can do that, you're going to wind up not selling low and buying high. You're going to wind up, keeping your head. And that's what we want to be doing, right? So anyway, so right now, what are we doing here? We've got like 540 as resistance here. I'd say 500 definitely here as support. So we're essentially right in the middle of the trading range with Google. I would just say use those. My goal for this video was basically just to alert you to how difficult it is to trade after hours and how a lot of times you're going to wind up doing now what you later decide you shouldn't have been doing. But with all of that said, just watch 540 as resistance. Amazon's another one that gapped up, has gapped up after hours. That's even kind of closer to resistance. Look for Google. It's up just 2% off of the close. Just be careful. I wouldn't fade this. In other words, don't short this move because it's a gap up. It's only 2%. If the stock starts moving up, go ahead and buy it if you want. For me, the lesson is just in what happens after hours, less than whether this is a trade tomorrow. So, okay, members, covering a lot of stocks that are working. Yesterday I was talking about shorts. Today I'm talking about longs. It's always good to have both.